I'm Cesar Delgado from back roads of Illinois. I am joining with Connor Bridgman from Advanced Trading in Assumption, Illinois. He is with Tommy Grisafi. How are you today, Connor? Welcome to join the show with the cold weather is in the Midwest.
Hey, good afternoon, Caesar. Uh, Great. Thank you for having me on. And right now in Central Illinois, it's around 30 degrees, and it feels like 60 degrees because we've had those negative temperatures. So I'll take it.
Lucky. Let's start with the World Agricultural Supply and Demand Estimate report on last Friday morning from the Department of Agriculture. Could you tell to the audience about January's report?
Absolutely. It was I'm going to call it a left hook. We had weaker markets going into it, and if you were looking for a bounce, it was the exact opposite. Definitely a bearish report. Caesar, it was negative. Highlights, the big, not a whole lot of bullish numbers, but the numbers that stick out to me, number one, on the U.S. corn yield, uh, they decided that we were going to have a record corn crop in 2023. They bumped it up to a 177.3 uh, bushel average. That's a 2.6 boost from what we saw before. So a big number, and then carry out grew. We saw a much bigger number on the soybean front at 280. Average trade estimate on U.S. carryout was a 240. So big bean carryout. Corn corn yield jumped up. That was uh, a big surprise as well. And then going down to South America, um, they didn't Argentina. They were at the top end of the range, and they didn't adjust Brazil as much as we were thinking. So overall, it was a negative report. The markets reacted accordingly. We were down, and we've been down most of this week. So definitely a bearish gut punch that we saw on the USDA report.
Dang, isn't that great?
Correct. Could
South America weather create pretty hectic for soybean farmers in Brazil. What is the yields for Brazil, especially in Mato Grosso and Parna?
Yes, hot. Uh, Talk about a hot topic. One that we've been digesting for the past 2 months is that South American weather, right? When they were planting their soybeans in this fall, they were significantly dry. They were planting in dryness. We saw delays in planting there. Um, and we saw the bean market react accordingly. We rallied. I think was it November 20th? Late November, we saw $14 March beans. Today we're sitting at 12.13, right? And what happened is the rains started to come. That forecast changed significantly in Mato Grosso and that Pariah region of Brazil. The other thing I'll mention on that front, that's what's getting the headlines. Argentina has consistently got rains and is looking at a record crop. So, where we stand today, right, as they begin to harvest that soybean crop and we continue to digest the yield, now the big discussion is the CONAB number, is the USDA number accurate? I've seen Reuters had a very good article about guys second guessing those numbers and how they feel that the numbers are way too inflated for what is truly down there and is for yield. And so my first thought when I hear reports like that is I heard the same thing this summer in the United States where the yield they have wasn't it wasn't as good as what they were printing on the USDA. So I'd be very careful buying into the yield is much worse than what they're printing. I've seen that be a losing battle. And so as we sit as we sit right today, the other thing to keep in mind is just based on acreage alone, we can take a big hit on yield. Even some of the very low, on the low end of the forecast, and we still grow the carryout down in South America. So I'd keep that in mind when we start digesting yield, make sure we're looking at that production number and getting the whole picture on South America.
It was pretty wet weather conditions for December. I
Yeah.
remember correctly in Brazil since December.
Yes, yes. Brazil, uh, gosh, was it the first or second week is when that GFS, that forecast model changed and they began getting weather. The other thing to keep in mind, Caesar, is when we're talking about the dryness, Mato Grosso is their big commodity producing area. And that was what dry. Southern Brazil was getting more than adequate moisture continuously. So we were really debating, that Mato Grosso region is where we were thinking the yield hits were going to come. They began getting rains, and we saw things change very quickly, as we usually do when we're digesting those dang GFS models.
How are the grain market for today's close bell in downtown Chicago?
Yeah, so we closed higher, corn, soybeans, wheat across the board. So number one, I'll take it if I see green on the screen. I haven't been able to say that very much. Um, Corn market, we closed up just a penny, but we're almost eight. March corn closed at 444, almost 8 cents off the low. So here's what we're hoping, and what producers should be hoping, is that we found a bottom in this market, that we've digested the bad news we've been getting, and hopefully traders trades the market will start looking forward and maybe digesting the things we don't know, like what acreage in the United States, are the big ones going to be the safrinha corn crop and what that could look like. Soybeans, we closed up March soybeans up 8. Again, we're about 13 cents, or I'm sorry, 12 and a half cents off the low. Again, good to see. And then wheat followed suit as well, up a little bit. So we'll see what follow through we get Friday and then into the weekend, but positive close for today. So we'll take it.
What is your opinion for feeder with the prices?
Yes, similar uh looking at feeders. Um, we've had a good run, right? It's hard. It's much like the grains. We haven't got a pop on grains, but we're still well off from where that high we saw this fall. But that doesn't mean we shouldn't be looking at protecting this and rewarding the market with where this rally is and what we've done. Again, feeder same as live cattle. March feeders, uh, big run up. Looking, I got March feeder at 232 and at 232 and a half. So good levels, good run up. It would be nice if we got a positive cattle on feed report, maybe broke some of this chart resistance and close a little bit higher. But I think we should be, cattle guys should be proactive at defending these levels in feeders.
Finally, what would happen? And the corn complex is going to be in $3 for next couple months.
Oh, number one, I hope that doesn't happen, right? I hope today's the bottom and we can maybe begin to get some bullish news and get the funds that are so short, as short as they've been in the past 4 or 5 years, maybe they reduce it. But if that doesn't happen, right, the market doesn't really care what I want it to do. And if we see another collapse, let's say May corn drops that 50 cents to getting $3, Um, Number one, what we'd see is we'd see a lot of depressed producers, right? It would be I don't want to see another 50 cent drop, but what we would hope to happen in that scenario, and I hope it happens before we get to three, but that's where we hope that demand comes back in the corn market. And so going forward, if we could see demand come back and then hopefully rally above three in the next couple months. Long term, if we say the same thing for 6 to 8 month window, it'd be a little bit different story. That's when we start looking, I would approach guys if we're looking at a very negative market with a big carry out and a three in front of it, right? We need to start looking at what your individual yield is this summer, late summer, into fall, and what we should be defending. And then also when we get in the $3, those low markets, that's when if we have the bin storage, that's when the merchandising opportunities really come into play. And so we need to start um, thinking about that, being prepared for the carry market and planning accordingly. But the one thing, if we think if we think a $3 market is on the table, we should be being proactive now in the market and defending your balance sheet, defending the prices right now.
Not good for the farmers with their bottom line.
Absolutely not. The $3, uh, I think it'd be interesting to see January 12th of 23, right? What was that farmer price that they would have printed? I believe it probably would have been somewhere in the 550 range. And if we had a three on it, talk about a quick fall from the $7, $8 prices that we've seen, $6 prices for 23, five got accustomed to. Talk about a quick cliff and a quick drop if we see a three. Again, I hope we don't.
Is there anything would you like to go to be telling the farmers about their calls and options for a new quarter?
Yeah, definitely. I would look, we've seen a depressed market. When we're looking at options, we should look at what the volatility index is. And what the volatility is telling us is we're well below the 5-year average on that volatility. What's that mean for the options market? It means that they're a little bit cheaper, relatively cheaper than what we've seen the past few years. And so if you're a guy that's sitting on a good chunk of old crop, something like that, we've seen the market drop 10% going from fall, and it's kind of, my gosh, what do I do? The answer to that for me, what I would say is we need to convert bushels to cash, right? If we're sitting in the bin, it's time to have a game plan to move it. And then the re-ownership strategy going into May, July is relatively cheap. We can stay in this market while still converting the bushels to cash, putting that cash in your pocket, stopping and operating no payment if it's out there, and then going from there. And then same thing if we're not going to make sales, it's the same similar strategy looking at the 24 crop, right? We're long the market, we have that market risk, we should be looking and putting a pencil to it and how we could defend that balance sheet using the options.
My pleasure that you joined the show for today. Thanks. You're welcome to join the show anytime, Connor.
Thank you very much. Thanks for having me. I'd be happy to come back on. um, Enjoyed talking to it, and thanks for having me.
This is Connor Bridgman from Advanced Trading in Assumption, Illinois, from back roads of Illinois. I am Cesar Delgado. Have a good day.